Good evening, folks. This is ICT with the Pro Traders Club installment for March 9th, 2011. Okay, we're going to start with AK. Okay, folks, that is a very common thing, unfortunately. If you were to take a consensus of the average net loss for a Forex newbie, it's anywhere between $5,000 and $15,000. So you're within the normal range for losses for a new trader. I've hinted at your post here. I actually responded to it on the forum at Baby Pips and told you that while it is probably very disenchanting and a little unnerving to have to not that you had to admit to it, but that you did admit to having such a large drawdown. That amount of money, and it may sound like it's a lot, and I'm sure it is to most people. I mean, if you had it in your wallet and you lost it, you'd miss it, obviously. But in terms of market equity, that is certainly something that you could return to yourself if you just stay focused and do not get too much of a hurry to get the money back. In other words, if you try to take your time and focus on doing things consistently and methodically, $14,500 is certainly achievable, and it won't take long. But the key is not to think about doing it quicker. If you just take it in one small step and repeat the same process over and over again with realistic expectations and conservative risk, it's certainly something you can gain back and move to the black. So my advice is to keep plugging away, focus on consistency, and keeping risk low. And when you finally start seeing the setups that you can move into taking trades that are risking more than 1% and maxing out at 2%, if you're consistently doing that, $14,500 could very quickly be erased with consistency. I'm not saying you're going to be able to do it in 10 or 15 trades, obviously, but working towards a goal of consistency will certainly erase that amount of money. So just keep going and work one step forward every day towards consistency, and you'll see it go away. Okay, Aaron, my advice to you is do not trade more than once a day. And since you and I have spoke probably more than any other individuals on the forum, I've kind of like developed an affinity towards you. I want to see you succeed. I'm not trying to single you out and not show as much concern towards the others, but I really want to see you become consistent. And the reason I suggested the homework idea of just taking a single trade, and if it's profitable or break even, you end the day there. Buying only in the buy zone, selling only in the sell zone, and perhaps even just taking one pivot to the next, and just basically taking that as your trade for the day. Now, it doesn't mean you can't lock in the move once it moves from one pivot, from your entry to the next pivot, in other words, in the direction you're trading. You can take something off at that point and then let the trade try to run and maybe capture more and trail the stop as it goes. But only one trade per day, and only focus on don't try to catch the whole day's bias. Okay, now I'm going to kind of get ahead of myself here, and I'm going to be really wading into waters of other people's questions per email. um, private messaging and also through the forum. The way I've developed this thread, I'm kind of attacking the same repeating pitfalls that new traders have. You want to have action. You want to take action. You want to be in the market trading. It's not fruitful, in your opinion, as a new trader, because I know this is how I felt. It's not fruitful for you to just be looking at the markets and taking demo trades after demo trade after demo trade, because you're fixating your expectations on profits. And early on, your focus should be focusing simply on, am I consistently doing the same thing over and over again, not deviating, and does it show a net gain? Do not equate that with, I need to make 20 pips a day. I need to make 100 pips a week. I need to make 450 to 800 pips a month. Your initial 3 months, the first 3 to 6 months, I suggest that you should be really focusing on adopting a consistent mindset. And I like the idea that you're stepping out here and you're putting your thoughts out. But whenever you get one trade, and as soon as you enter that trade, whether it pans out to be a profitable trade or a loser or break even, your day stops right then and there. It doesn't mean your analysis can't be continued through the thread. It just means that your activity in the marketplace and your exposure to risk is now finished for the day. One trade. And if it happens to be in the London, that means you cannot trade the New York. Not in your demo, but you can suggest in the thread as like a journal entry what you would be doing. Okay? And I cannot stress this enough. If you can sit on your hands and watch the market trade through session after session, even if you had the bias for that session correct, and it moved to a level you thought you would see, still that is one of the most beneficial things for a developing trader, is to, number one, build the confidence to trust the next signal. Also, build the confidence to trust the time zones when you want to be trading. Trading the opens and closes of sessions, the overlapping of sessions. These principles, even though we can see them over a period of time in hindsight, if you aren't really comfortable trading them at this point, that means you don't trust you as the trader. And there's your red flag, because you can see that these methods are very consistent. They happen, like I said, nearly every day. But simply because they're consistent doesn't mean you as the trader needs to be in there every single day or every single session. So my point in all that is to say that focusing on one key setup for a 24-hour period will, number one, build the patience factor, which is paramount. It will build the control of you not wanting to chase price. It will control your desire to overtrade, because you're only going to be trading specific times of the day at specific price levels, looking for a specific entry pattern. Okay? Very generic principles, right, guys? I mean, this is the same thing we've talked about every single Pro Traders Club, every day in the forum. There's nothing new. The only thing I'm doing is unfolding one more dynamic and one more dimension to how you can fine-tune these basic principles, okay, and get them closer to lower risk and higher probability setups. If you don't take advantage of the time right now, before you move into the more elaborate and technical patterns and setups, you're really cheating yourself. And I'm purposely dragging this portion out because I don't see a large enough sample size to justify me moving towards more advanced concepts. Because number one, yes, I get feedback through email, but I want others to see on the forum that consistency, number one, can be obtained, and it doesn't have to take long. The consistency factor is um, one of the most detrimental things that impacts traders' developments. I mean, you have to have control over you as the trader. And unfortunately, when I post my trades in here, um, sometimes it gives the viewer um, a sense of excitement and almost like, well, I've seen this setup happen for so many times in the last 2-3 weeks, and it's just like clockwork. I'm gonna get in here, and you know what? I haven't made that much money because I've been sitting on my hands or trading the wrong patterns or wrong time of the day. So what I'm gonna do is I'm gonna take my account that's $1,000 or $500, and I'm going to over leverage it because it's been working so this long. It's going to work at least for one more trade. And I'm going to over leverage my account, and I'm going to make up for all the days I really didn't take the trades. And what will happen is invariably you're going to get into a move. It's not going to work out for you, or you're going to get in a move and it's going to move against you marginally, and because you're over leveraged, it's going to spook you out of the trade. Then it's going to move in the direction you thought it would, and then you're going to beat yourself up. And then you're going to chase price again, trading one more time than you shouldn't have, or you over leveraged even more to compensate for the minimal drawdown you just went through in terms of pips, but you over leveraged your account, so now you have a larger position lost than you should have for your account, and you're stuck in that loser cycle, and it's really something you can avoid. So my advice, Aaron, is to continue plugging away with what you're doing in terms of putting your expectations for the market out there. Nobody's grading you in terms of whether you're right or wrong, okay? But you're building, you're desensitizing yourself. You're exposing yourself to the same thing over every single day. In other words, you're putting yourself out there. You're killing your ego, which is one of the most beneficial things you can do. And I'm not suggesting that you are egotistical. It just keeps that portion of the trader in you, and those that do these entries in this form or their own thread or whatever. It will desensitize your psyche to the risk that's involved, because number one, if you've seen the pattern this many times show up on your charts at the specific times of the day we've already identified, moving to the target levels that we can clearly determine in terms of price projections and previous highs and lows and all that, until you start actually doing it repeatedly over and over and over and over again, you won't be desensitized to the risk involved. And that's what you need to do. You need to continuously expose yourself to doing the same thing over again, because at some point it won't matter if the trades pan out and become a net loss for you, because you've seen it happen enough times over a sample size or a sample period of time that you know that odds are it's either going to continue to move like it has been, or it won't give you a trade setup at all, and you'll just sit on your hands. And that's a position. No activity in the market is a trade. I've been exercising it, for a few days now. I'm just not comfortable with going in the market right now. Have there been setups? Sure, there have. Have I been taking advantage of any of them? No, I haven't. I took time with answering emails and preparing other resources for this thread and for my blog. I am not in a hurry to get back in the market, because I know when London's going to open again. I know when London's going to close next. I know when New York session is going to open up. There's no rush for me to get back into the market. I know, just like if I had a day job working at company XYZ and we made widgets, and my start of the day was at 7 o'clock in the morning, and my lunchtime was at 11 o'clock, and I went home at 4 o'clock in the afternoon. My day is predictable. I know what's going to happen. I know when I'm going to do a specific thing. I know when a specific individual is probably going to come to my desk or ask me a question, or if we go to the water cooler and we we meet, we're going to talk about the same things we talk about that maybe we saw on TV. You want your trading to be just like that, and that's how it is for professional traders. We identify key points in time that we need to be sitting in front of the charts. London session is always going to be there, guys. I'm not in a hurry to get back in there, and I almost really made a point to sit out for this entire week just to show that it can be done. It doesn't make the thread exciting. It doesn't make the Pro Traders Club videos exciting. It doesn't get you all buzzed up because there was a new video entry. But for the mature traders, okay, it is a sobering reality that being outside the market and not taking any trades, it's not going to kill you. And if there's things that's going on in your personal life, if you're not feeling well, or you're just not into it, there's no reason why you can't just sit out for a week, or a few days, or even a month. Take a hiatus if you have to, and just study, read, or take yourself completely away from Forex and all the markets, and don't even watch it for a couple days, and just let yourself relax and ground yourself, and then come back to the charts and get a fresh perspective. So that's my my little rant for you, Aaron. Just continue to keep plugging at it, but only take one trade. Okay, Jarun, I did get your email, and if you just want to send that document, that's fine. I'll review it and see what you got. There is a brief little like mini course I'm putting together. It's not very long at all. It's just a real quick, maybe 20-minute long video. I'm anticipating let's just say that it's going to be approximately 20 minutes long. Basically, how to approach your trading day with only the concepts that we've already exposed. Not any of the more advanced things yet, but simply what we have right now on the thread. How one can start their new trading day. What information should they have available to them before they get into the market, and how to set up their bias for the sessions and for the day. And I think that's what you guys have been chomping at the bit for, so I'm going to make your weekend and have that ready for you Sunday evening. And in fact, what I'm going to do is I'm going to have a dry run with a webinar. I found a company that will allow me to have. Actually, I'm surprised. I've been looking for a maximum number of individuals that will let me have linked to my computer, and it didn't give me a number as a maximum. So, based on how many hits I get at my blog and how many hits I see on the Baby Pips thread, because it's kind of interesting whenever I do a post to the thread, or I send a new upload to YouTube, within the first 20 minutes from the time I actually hit the post and it makes it to the thread, within 20 minutes I got 100 people. Interestingly enough, it's all around the world. They come quickly to see what's being posted, so I think that's kind of neat. But I would anticipate probably around 200 people as a potential number of individuals that would be hooking up with us. But I'm going to try to have it set up, and I did request individuals to post their email address and send it to me in an email, but I found that I don't need to do that. I can send a link to a forum like this, or my blog, or even post it in a video, and all you have to do is follow that video, and it'll be a key, like a pass key. You enter this in, and then what it'll do, it'll sign you into my screen real time, and whatever I'm doing on my screen, and now I'm talking right now, will be live. So I'm planning that for this Sunday evening. So for those that are interested in doing that, just keep monitoring the thread, and I'll have something posted probably Saturday evening to have instructions on how you can join. And what I'll do is I'll cover the presentation on how to approach your trading day every day, using the concepts we've already expressed and shared on the thread so far. So again, if you want to share that checklist with me via email, Jerome, go right ahead. I'll be happy to take a look at it. Okay, Aaron, real quick, I know I teach to take the Friday and Sunday, blend them, use the highest high and lowest low, and Friday's open and Sunday's closed for your Monday pivots. But if you simply just use the MT4 platform, the daily pivot macro, those pivots will be perfectly fine. You won't need to do anything in terms of calculating or manipulation of multiple days of data. And I think you'll if you see the videos, this is what I'm using now. It'll allow you to switch back and forth from also New York pivots and GMT pivots, just to get a feel for what other traders might be utilizing. But don't be so concerned about it being to the pip, because if you remember from the first thread, it doesn't matter if you're off by a few pips. 15 pips variance is normal in terms of anything support and resistance wise, and since pivots are an implied support and resistance level, it still falls in the same category of 15 pips variance is normal. It's a standard deviation, so don't worry about it. Okay, AK. Yeah, 3 to 4 trades a day. I would agree. That's too much, and that was what I suggested in the last video. Simply because we have multiple trading session opens and closes, doesn't mean that it's wise for everyone to try to chase and trade every single one of them. You only need a profitable trade every time you go in the market. Take one session, and if you can get the discipline to build up the patience and wait for the right session, open or close, for a 24-hour period, only taking the one that has the really clear setup and just trading that one, that's when you become in my opinion, elite, because you've controlled every aspect of you as the trader, and you're allowing yourself to get in sync with what the market dynamic is going to do, versus and try to impose your will in the market. So I really like what you shared here, that you're adopting a less frequent trade number for the day, so that's good. Okay, that's just real quick the trade I took the other day on the euro, and I have since been flat. I haven't taken any action in the market since then. Nice little move. Wasn't a barn burner, but it was a handsome enough move to be content with not taking anything else for the week. So if I don't have anything for London later on or New York tomorrow, I'm not going to be too concerned about it. So patience and control, that's what I'm exercising here, and hopefully it's inspirational to you guys, and you realize simply because I make a living doing this, it's not something that you need to be doing every single day. And that's my pattern and hope for this thread, to hopefully instill that in you as developing traders, to give yourself the permission to not have to be in the market every day. Okay, Jim. Excellent. Very good. I'm not even going to utilize my own chart setups, and I can use yours right here because it's almost identical to what I was looking at. Very good analysis. Nice, clean chart. For the new traders that have started with indicators and MACD and stochastic and everything else you could possibly find on your platforms, I'd like to have some feedback in the forum, either through my personal forum on my blog or on the Baby Pips thread, what every new or aspiring Forex trader still wants to know. If you could take and post what your trading has been like since you've removed the indicators, or you know, if you're new to the thread and you just started following us, what your apprehensions are with taking the indicators off. What's your thoughts and sentiments about taking um, lagging indicators off of your charts and noticing, hopefully, because we've been doing the Pro Traders Clubs for a few weeks now, have you seen a level of consistency with not utilizing indicators? Because eventually I'm going to be using them in my Pro Traders Club videos and my presentations, and I think when you start seeing how I use them, it's going to be exactly how you were initially anticipating them to work for you. But really, we're just going to be using them as a confirmation for what other traders that follow these indicators would be expecting to see in the market, which adds strength and more or less filters or confirms what we already determined through price action. So I'd like to see that also as a feedback in the thread. So if you could do that for me, it'd give me an idea on where everyone is. But awesome trade, excellent. Okay, Rokas 1989. You have some questions concerning about directional bias. All right, real quick, I'm just going to go over another explanation on how I look at market direction and market bias for the day. If you recall our initial videos, all of our market analysis begins with the longer term time frames, monthly, weekly, and daily. You want to try to get a determination based on those longer term 3 time frames on where market is most likely trying to get to. If you trade in that direction, just using anything that gets you long for bullish conditions like that, or if the market condition is bearish on those larger time frames, looking for anything that will make you get a sell signal, your probabilities really ramp up exponentially just doing that. But unfortunately, because those charts are so slow in time frame, there's no action to the new trader. They see these charts as, well, they're too slow. Well, it's still moving 100 pips or 300 pips inside of one of those weekly candles or monthly candles. It's just you can't see it that clearly unless you drill down to the smaller time frames. So if you can't determine your directional bias from the monthly or the weekly or the daily, okay, you want to at least look for what levels of key resistance or support we're at on those time frames, and that will give you potential levels to trade from in terms of or if we're at a key resistance level, okay, what's the next level of support, and you can trade simply looking for that to unfold in the marketplace, and that would be your stage or your setup. Okay, you can use a 4-hour chart, wait for a market flow on the 4-hour chart to break down, okay, and take out a fractal low. For instance, if we're looking for a resistance condition to come into the market and maybe break down lower in price, using the 4-hour chart and running your market flow and waiting for a swing low to break down. When you see that, what would you anticipate seeing happen pattern-wise? Well, if price starts to break down on that 4-hour chart, and then we get a correction and starts to retrace back up, what would be unfolding? Potentially a optimal trade entry from the initial drop below that fractal. Okay, that's one way that you can really narrow down a directional bias. Reversing it for a long, if we have a monthly, weekly, or daily condition that looks like it's bullish, if the market flow on the daily chart is up, and we haven't reached a key resistance level that's clearly identified, focusing on simply buying that market is the most optimal approach to trading it. That means you avoid trading days or sessions that move price into the central pivot and above in the R1 and R2 levels. You just sit on your hands, don't trade those. Wait for the market to go into the buy zone, which is central pivot S1, S2 level, okay? And when we go to a new open for maybe London or New York, and it's in that area, then trade it long, okay? If you have that condition where it's bullish and we found a support level, and you look at your 4-hour chart, okay, wait for a swing high to break on the 4-hour chart, it's market flow, and hopefully once it breaks you'll see a retracement lower, and that's when you'll see an optimal trade entry set up, okay? I had a couple of individuals email me in terms of how to look for longer term setups, because basically what I'm just showing you how to do is day trade the market sessions to give you the action that you're anticipating, but approaching it with a more professional mindset. Only trying to do it at a specific time of the day, looking for a specific event, and consistently doing it over and over again. And you can see clearly that, you know, I'm not making these things up. They're there every day. And limiting your trading in terms of a session bias, not the whole day bias, the session bias, I think is where you need to be starting now, because I can't tell you enough how many times that I'll start my day, I'll go into the London Open and I'll think, okay, yeah, this is going to be a day where it opens and makes the low in the London, and then closes at the high of the day in the London close. It may start off, I'll buy the London Open and make a nice chunk of money, but later on in the day, you know, London will be either at the same level, London will be closing at the same level it opened at, or it'll be below it. Now, did I make money on the day? Sure, I made money on the day, but was I right or wrong in terms of the analysis? In that case, I'd be wrong. So, don't think that you need to know what the actual full daily range or candle is going to be in terms of direction. You don't need to know that. You need to know what it's going to be doing for 3 hours out of a day. That's it. 3 hours. Where's it going to go in 3 hours? Between 2 a.m. to 4 a.m. Eastern Standard Time. Okay? What's it going to do? That's all you need. Same thing with New York Open. What's it going to do? 7 a.m., 8 a.m., 9 a.m. Okay? That's all you need to know. London close. What's it going to do for about 2 hours, maybe 3 hours tops? Is it going to trade back into its range? That's all you need to know. That's all you need to know. The Asian session. Is it finding support at the previous day's high or low? Is it finding resistance at previous day's high or low? These setups are there all the time, and you just simply have to know what it is you're going to approach for that session, and that's the bias. That's the directional bias you need to have. Don't think that you need to have the whole daily candles direction all the time, because you don't need that. Now, is it easy to do when the market's in an explosive move on the daily chart? Absolutely. Absolutely. Those types of events are very easy. But when we start keying into areas of layered resistance or layered support, it becomes a day trader's environment where you just got to take the session, each session as it comes, and only trying to trade that session only. Don't think you have to have the whole entire candles move, because you're just going to either, number one, you're not going to be able to take the trade, because you're going to be trying to fight what you think should happen for the whole day, and then when it unfolds counter or contrary to what you thought it was initially, then you get frustrated, and what's going to happen after that? You're going to chase price, and we already learned what that does. It doesn't leave you many times in the black. In fact, it'll take money from you. So that's what I mean by trading in the direction of the 4-hour market flow. You want to see the 4-hour market flow get in sync with the higher time frames, and when you do that, it makes trading very easy. But you simply have to wait for it. And obviously, key support and resistance nullifies market flow. Okay, so that's the gray area you need to get comfortable with and anticipate price moves to not always be clear cut. Okay, so I hope that answers it for you. If not, just stick around. It will become more clear to you as we continue with the thread and post more resources. Okay, this is the day I suggested looking for a possible move. And as the price was retracing, I was expecting a possible bounce in here. And because the dollar index hadn't traded down to the ultimate low I was looking for it to trade to, I thought we'd probably bounce in here and try to go one more time up and reach for the previous day's R2 level. If you notice this high in here, actually, if you continue that over to this portion of the day, we also had 38% retracement level, which was noted also, and it was a day in time where it just didn't provide any support and it just broke down. Coming down to the pivot here, it looks like trading the low to the high for the day, looking for optimal trade entry. It's unfortunately, this was a day where it was too one-sided, and there was no buyers. I mean, they just took and rolled out the steamroller across the market and just killed everything. So these lows in here are the ones I was suggesting that would get blown out, because again, we have another clean level, and they wanted to take out any opportunity for stops that were resting in the market in here. And once we gunned those out, obviously everything switched to bearish, and it just simply went lower. No optimal trade entry, no bounce, no fractal form, nothing, and it just provided nothing in terms of a buy here and here. So that's just one of those things in trading. You just got to chalk it up as a learning experience and keep risk small if you took any action, and live to fight another day. Hello, goodbye. 2%, awesome. Very, very good. I don't recall seeing you posting anything else since this post, so if you stayed flat, I commend you for that. Very, very good. Exercise that discipline. Okay, Clark, awesome. That is excellent. 85 pips. I better not see you trading anymore. Alright, good job. Okay, Aaron, very good. You experienced 2 trades that were unprofitable and taking a step back until another day. Excellent, excellent, excellent. You just gotta take the losses, and this is why we keep risk small while we're developing. And once we adopt a consistency level, then we can get our mindset looking towards the next trade and not be so bummed out with the last trade. So even though it was, in your words, not the greatest Monday, there's just going to be days where you're not just going to have a good day, and just expect it. Okay, don't let it beat you up. Okay, Hordane, let's see here. Yes, the dollar index. We have well, you know what, let's take a look at the chart real quick. Okay, looking at the dollar. Okay, these lows in here, this is the reason why I was expecting the cable to try to reach one more time higher. I thought we would at least try to get down to this level in here. Okay, I thought that we had taken out this low here, coming close to it, to warrant at least a run down to here. And obviously, if price could get below here, try to get down to these lows. We have since bounced at this level, okay, and even at the time of this this recording, price is starting to move a little bit in the Asian session. So yeah, here's the bounce in here, bull flag formation, and we're trading just underneath this reaction low in here. Market structure doesn't look like it's going to roll over or anything, so we might be trading above it to find support and maybe go higher on the dollar, which would obviously put pressure on the cable and fiber. So that's where I'm looking right now in terms of the dollar and what the most likely outcome is. Doesn't mean I'm going to be right, but that's how I'm looking at it now. I'll come back to this section here because I was asked about this in the thread for the yields and the divergence in the yields. So, but that was the reason why I thought that the cable was going to try to push one more time higher, and it didn't come to fruition. Price found support on the daily chart, and it was off of these lows in here. Okay, Jim, 2 trades, and this was the second reason why I suggested that once you have a profitable trade for 24 hours, leave the market. Spend time in the thread. Type your thoughts there, where it's not risking your demo, it's not risking your real money, it's not risking your ego. It's just you'll feel like you're a part of the market by doing that, because you're sharing your analysis. So still eked out 15 pips for the day, which is still profitable. I mean, 15 pips is 15 pips, guys. But try to exercise the new goal for the new developing traders is to take a profitable day and end it. Okay, end it on a profitable note. Okay, hello, goodbye. You went long in the Asian session, not 100% pleased with why I took the trade, but it happened to work out regardless. I'd like to, if you could go back to this post here and post what specifically you didn't like about your entry. I think that would be insightful, not only to myself, because I'm curious, but the others that are following the thread. If you don't want to, that's fine. I'm just asking to see if you would. Thanks. Yeah, Vonner, that's we're talking about the same trade we were mentioning earlier. There was just no support found that day, and it just kept driving lower. So, yep, like you said, it's just you can't win them all. And the only thing we can do is consistently look forward and taking the next setup with no regard to the psychological impact the previous trade may or may not have. Okay, Alan, very good. Same setup that was discussed and shared by Jim a little earlier. Excellent. Yeah, I did notice that I think this is the post where you said the concepts were legit. I thought that was kind of neat. But yeah, that's what I'm looking for. I want to see individuals that are following the thread and applying the tools to gain confidence in the fact that it's working, not only for me in a video that looks like, I'm sure, to most new traders or followers to the thread, that I'm going in in the hindsight mode and grabbing things it's already on the chart. But when you're doing these trades yourself and you see them panning out exactly how, just almost a script, um, it builds confidence greatly, and it's not important that you believe um, how much money I'm making or how many trades I'm taking. Okay, if you focus on that, you're never going to develop yourself as a trader. Like I told you before, my money, you can't spend it, and I'm not spending yours. Okay, but you can use my tools and make as much money as you could ever imagine, and you're going to lose money still. Don't get me wrong, you're going to lose money, but the important factor is are you making these tools yours? And that's what I'm trying to get across. And for a few of you so far, it has become quite obvious that it's starting to click for you. And to me, that's awesome. It gets me stoked to see that, because I know what it's going to be like when we start going to the more advanced things, and it's just, believe me, it's going to be very interesting. But awesome trade, Alan. Very good. Okay, Jack B. Pip. I think this is the first post I've seen of you. If it's not, I apologize, but I haven't seen that I can recall any post made by you to this thread. So welcome. Thanks for your feedback, and excellent trading. Very, very good. I don't use Bollinger Bands, but like I said before, if you can implement your own personal little tools and applications and it still doesn't cause distraction or distortion to the methods, that's awesome. Very good. Excellent trading. Okay, Aaron. The point I wanted to address in this post, not that I'm going to talk about your analysis or anything, because I already did that earlier in the video. The average daily range indicator that I've shared, and I'm guessing here, I may be wrong, but I'm beginning to get the inclination that you, much like some other individuals that have been posting their average daily range insights on how their trades have panned out, you don't want to turn the indicator on during the first hour or two of London. Okay, you want to see price trade in direction and in a magnitude that would suggest that we may have placed the higher low in the market. Okay, absolutely, it is beneficial to you to use it, yes, but if you turn it on too early, okay, price may be trading at a low, okay, and it'll give you false data. Okay, if you wait until a few hours after London's moved away from a high, okay, and then you plot it, okay, then it would give you a reasonable expectation of a projected daily low, okay, and reverse it for a high. There's got to be some data on the chart, and hopefully a important reaction, low or high, for that tool to be beneficial to you. So I'm going to have more to say about this, and actually I have more to say about it in a teaching session on trading the London close. And I got an email real quick, not to get off of average daily range, because it's more or less kind of allows me to segue with the same concept in discussion. I got an email from a follower that recently got called back to his job, and his concern is now he's no longer going to be able to trade the London close. I'm sorry, London Open, but his only opportunity to trade would be the London close. And there's nothing wrong with that. I mean, I'm going to be sharing a method with you how to trade that for those that have known me for a while, I suggested this swing is always around the London close time frame, around 11 a.m. And if you look at my original thread, it talks about that. And other traders that have used my tools, if you know who they are and you search out their threads or their posts, they make reference to this swing that happens in the market every day. And if you know how to trade it with the rules I'm going to share, it's pretty consistent. You can trade it with the 90% accuracy. And no, I'm not stretching it or putting lipstick on it to make it sound super fantastic and sexy. I mean, it's if you're trading it, you can trade the majors, and it's pulling in 90% accuracy. So don't let it upset you if you're only able to trade one session, because I'm going to be giving you methods and tools that have a high level of accuracy, and you're going to still lose money, yes, but overall, I mean, you're seeing just one concept with a specific entry pattern trading the London session, which I like the most because most of my tools really happen to occur in the London Open. But there's other specific trading concepts that are session generic, like the London close and the Asian session concepts I'm going to be teaching. And there's a few on New York as well that they have a high level of repeating. And in the London close, I will be specifically teaching the most about average daily range in that teaching. So there's a couple more little things I got to add to it and dress it up a little bit, and then it will be released for the thread and the blog. But for now, just understand the ADR. Don't place that on your charts right at the London Open. You want to give it a little bit of time to put some data on your screen, and then plot it once you think you have a really solid low or high, and then it'll give you a reasonable expectation in terms of projected high or low. Okay. Okay. Alan, you asking, how do I feel about taking trades when there is good confluence, but we do not have optimal trade entry? Just how critical is the optimal trade entry in your opinion? Well, for very low risk, very specific entry points, I think the average trader will agree that the optimal trade entry pattern is a very good bread and butter way of trading, and it's not real fancy, it's not real high tech. That's how the bank traders are trading. They're not using Gartley patterns, they're not using butterflies, bats, and all these other patterns that are really cool, and they're in vogue now, but they just use simple support and resistance and price retracements. I mean, that's how it works, and it's not real fancy, it's real clean, but I have picked up a few tools that are in the same vein as the ones you're learning here, okay, but they're a little bit more technical in terms of what you've seen so far, and until you get a concept like we have here under your belt, it's not going to be beneficial to you, and in fact it may be a distraction or a deterrent to your development. So yes, there are other tools and there's other concepts, there's other patterns. I am a pattern trader. Obviously you can see this one. If you never learn another one ever again, not just from me but from anywhere, in any forum or book, I mean, what you've got so far on this thread is it's $1 million bill I just handed to every one of you, and you can keep cutting that $1 million bill over and over and over again if you just exercise the patience and the willpower to just follow the rules as it's been outlined here, and only trading when it's set up. And that's my answer to you. That's how I feel about it. There's other ways of trading, yes, and you can profit from it, but if you use sound principles with money management, with what we've already discussed here, trading is very easy, and trading is very boring, and it's very routine, because you know what you're looking for every single time you go into the market. And when it's not there, guess what? There's no check in front of you to sign. Okay, you're not getting paid. You just gotta wait for the next one to come through. Okay. Very good post, Simon. Staying out of the market when there's really no good setups is, yes, one of the hardest things even myself as a trader had to learn, because and I always found, and I'm sure it's probably like this for most of you guys, I found when I was developing early on, whenever I had my strings of really good winners, I wanted to be in the market all that much more, because I wanted to have that euphoric feeling when you take out a profit, or if you had an entry and you went right to your profit target, and if it turns on a dime right then and there, you get that rock star mentality, and you think you're gonna be able to do it again and again and again. Um, and there was a time when I was trading like that between these sessions, guys. I mean, there would be days where I would have 12 trades between the London Open and the New York Open. Now, how's that for aggressive? Did it make me money? No. So, yeah, I mean, you just gotta wait for the right setups, and you're only going to be able to do that if you continuously force yourself to work within a specific time window and a specific pattern that you're going to look for every time you go into the market. And you don't care about anything else. You don't care about overlapping fibs. You don't care about riptide reversals or other things that I've already hinted at on my blog, as I'm going to teach you later on. All you care about is what's been taught so far. And as you can see, it's profitable. You can make money with it, and you can still use it to haul in a majority portion of the daily range if you leave some on. So, a very good post. I agree with it 100%, Simon. Okay, Hordain, this is your overlay of dollar index, and zeroing in on my this is actually my wedding anniversary, guys. I got married on Valentine's Day, and my 6-year-old, he just turned 6. He was actually born on Valentine's Day, so the Lord blessed me with a little boy, one of the 4 I do have, and he was originally expected to be born on the 5th of March. Yeah, 5th of March, and the Lord felt fit to give me a Valentine that I've been blessed with. So yeah, when I saw that, that's the first thing that comes to mind. So I share that with you guys simply because it came to mind, and I'm tired and I'm ranting. So yeah, this is the overlay that I taught on how to use the yields, and as you can clearly see, all you need is one to fail to make a new high, and when you see that happening, that means there's probably going to be a swing high form in the dollar index, and expect to see price trade down, much like you did in here. See how we have an unwillingness to make lower lows as it did here and as it did here, and then you saw that price advancement here, which equates to this low moving up in here. Okay, let me make sure it's on your screen. Okay, yeah, this move in here, that was precipitated by this action. Okay, so yes, that's specifically how you can utilize the dollar index and the yield to give you your directional bias for longer term swings. And I'm using this now to answer an email that was given to me. There's individuals that are really fascinated with the fact that the intraday trading and day trading is as precise as we've detailed here, but they want to have a little bit longer term time frame and longer term swing analysis to take a little bit larger move out of the market. And this is how you use it. Okay, everything you guys are asking me in emails, and I'm not trying to deter you from sending me emails, but if you go through the resources that's already in this thread and really study it, a lot of the answers are still there. And I think what it is you're glossing over the material, and you're just looking for the most obvious things that jump off at you. And it's just not that easy, guys. You're going to have to really put some effort into studying the concepts that's been shared and seeing them unfold every single day. Get yourself in the market and look at it. Now, if you have a job and you can't be watching the charts real time, you can still pull up a 5-minute chart, 15-minute chart, hourly, 4-hour, daily, weekly, monthly, and you can see what price did then. Okay, in this study. Study it, get used to seeing it over and over again, and you'll see that using this concept that I've shared will help you nail down price swings on a longer time frame and catch the 3 to 5 to 600 pip swings. Okay. I like what you're doing here. It kind of gives you a raw number to work with. It to me, when I see these types of lists or a sample size of last few days, it gives a very visual. As you can see in here, you have large range day, smaller, but still large, and then also we drop off to 80, 69. What's going to come now? Large range day. Then we get approximately half the previous day's range. Okay, so it's like a pattern of large, and you see it shrink down. And get yourself ready for a range expansion or a trending day. It's going to come, and all of a sudden get this boom. Okay, so that's very good. I like how you're doing that. Continue. You're certainly welcome. First time I saw, I think it's the first time I saw you posting in the thread. So I appreciate your feedback, and I hope that you find the material insightful. Alright, Northern Touch. Okay. Yeah, there's been a lot of times in my trading where that's happened. Writing it down after you've already had a predetermined limit order that never gets filled. That's the best thing you can think of as having it's a learning experience. And you've really identified the reasons why I share in the videos. I kind of look for like 80 to 90% of whatever the projected target is for me for my entry. I'll scale out at 80 or 90% of the move. Okay, and most of the time it's 80%, and I'm okay with leaving some on the table, because if I'm taking consistently 25, 30 pips, every time I go into the market, and I've suggested you guys do that at 30 pips, take it out. It doesn't matter if the trade never gets to my ultimate target. I want to get paid, and that's my way of doing it. So hopefully you learn your lesson in here, as I had to do over a number of years being stubborn. I finally got to the point where I said, you know what, if it moves 100 pips and I'm getting 80 of it, what's wrong with that? So very good. Nice to see you had the mindset to get out before it drifted even farther for you. Very good. Okay, Jeroen. 50% taken out at 30 pips. Very, very good. This moving average in here, are you using that for your directional bias? And if not, what is it in here for? I was just curious as to why you had that there. Okay, Ali Shijo. 30% taken out, 25 pips on your trade. Very, very good. I'm not going to open your chart up, unfortunately. Please don't be offended, but if I do, I'm going to lose the formatting on the screen for the video. So, very good. Excellent. Very good trading. Yeah, if you can talk in your trades, that's certainly a quality that you have over me, because I just can't do it. It makes it very difficult for me to concentrate, and I don't like to get into a trade where I talk myself into staying in it, even if I see a questionable continuation pattern. So, run with your strengths and cut your poor trading habits. That's the best thing I can tell you as a developing trader. And the sooner you let go of the self-defeating traits that you're experiencing as a new trader, the better off you're going to be. And you could trim a lot of time off of your trading that I actually had the dissatisfaction really of having to do to myself and resist these pitfalls that every one of us go through. But I went through multiple accounts before I finally got smart enough to say, you know what, I'm doing it wrong, man, and I got to change it, or I'm just going to continue to waste money. So very good. Okay, 25 pips was taken at 30%, 13 pips taken at 70%. That's awesome. That is absolutely awesome. That's what I want to see. You got to get yourself paid, and if the trade moves into profit, you always try to take something out. Don't let it go to 20 pips or plus without considering taking something off. 30 pips, absolutely something has to come off, but 20, 30 pips, man, that's a good way to keep yourself getting paid. Okay, Hordane. Yeah, I noticed that you obviously didn't see it when I was suggesting taking one profitable trade. 3 trades for the day. Very good, very good. I like how you have everything mapped out and as to why you're doing it. That's very good. Excellent. Okay, Clark. That's awesome. Wow, 111 pips. That's very, very, very good. Big difference from a couple weeks ago, isn't it? Kudos. Very good. Okay, Vonner. Well, in the videos I suggest that the 5-minute chart should not be the chart you're staring at. In other words, when you get into the trade, to zero down, to get the risk as minimal as possible, finding your fractal lows and highs on a 5-minute chart will give you the very tight dealing ranges that the market makers are working within and building fractals off of. Obviously, if you're a scalper, you could be looking at a 5-minute chart, but you just really want to use the 5-minute chart to zero in on a lower risk entry based on a 15-minute or a 1-hour chart setup. If I'm not mistaken, I tell you in the videos that I'm using a 5-minute chart because it allows me to give the data that I want to illustrate in the price swings and the support levels that longer term 15-minute and 1-hour fractals are based on. So there's no disparity between what I suggested for watching your charts and the 5-minute charts utilization. It just means that I'm using it to illustrate the point. Now, also, yes, your level of trades would be a lot less, and that was explained also in other videos. Whenever you're swing trading on a higher time frame, how many swing trades do you think is going to happen on a 30-day period? Over the course of a month, how many swing trades do you think you're going to see unfold on a daily chart? It's very easy. Look at a daily chart and see how many times you see a price swing once the move starts from a swing high or swing low. How long is it going to give you opportunities to move within that? Unless you get yourself in sync intraday with that move that's presently unfolding on a daily chart, you're not going to see a whole lot of counter swings. It's going to be trying to unfold what its price dynamic is for the daily objectives. Where is it trading on the daily chart? It's going to continue to move in that direction until it reaches a previous swing high or low or resistance or support level. 2-3 tops per month in terms of intermediate term swings. That's what my understanding of the market suggests. Obviously, intraday trading, you can do that on a daily basis in almost every trading session. And again, I'm putting this out there. Do not think that you are the rock star that's going to be able to nail down every open and close in session. You're not going to do it. I'm telling you, you're not going to do it. So don't even try it. You're not going to impress anybody. All you're going to do is throw away your money. You'll make money on one session and you'll give it back on another. So this, I understand that the 5-minute chart really is just a means of showing you how you can take scalps. And again, my scalps are 20 or 30 pips. This is how you scalp the market. It gives you the opportunity to find low risk trades, and even though the optimal trade entry works very well here, it doesn't mean it's not working on the 4-hour chart, because it is. It doesn't mean it's not working on the daily chart, because it is. If you look at the weekly chart, it's still in there too. It just means that you simply have to understand the 5-minute chart I'm using in the videos is simply to illustrate the fractals that are forming throughout the day. And go back over the videos and you'll hear me actually say that you know, I'm going to show you this with a 5-minute chart. Not that I advise you using a 5-minute chart, but optimal trade entry. Think about it. If you're looking at a daily chart, you're not going to see it a lot. But that's a type of trading that can be done. If the swing is already unfolding on the daily chart, you just wait for an optimal trade entry intraday at a session open or close, and look for optimal entry to materialize to get you in sync with that swing trade that's unfolding on a daily chart. That's how you do it. I mean, this is not about how many trades you get. It's about how many quality trades pay you. Alright, 636, very good, 30 pips. Counter to the daily direction that unfolded for the day, but this is my point in example right here. You know, finding a way to get paid and not have to worry about getting the overall directional bias for the day in your pocket. You just want to get consistent opportunity of pips harvested and deposited in your account. Excellent trade, very, very good. Yeah, that's excellent. 30 pips and exactly 25 pips is really all you need for a whole week, and you'd be surprised how it compounds. And I don't know how you feel about 25 pips for the week, but if you're new to this thread and new to trading and new to baby pips and you've been following us for a couple weeks now, I hope you can see that if you can sit on your hands and wait for the choice setups, the really choice setups, trading at an open or close of a market, 25 pips is very, very achievable. And this is what I suggested in the earlier videos. And we're just still at the early stages of everything that's been planned to be released on this thread. But I think up to this point, I've lived up to at least the direction of where we're heading in the material. And like I said, if I stopped here, everyone that could go through the resources that's been shared here has a complete trading system and money management application. So I'm looking for individuals to put it to work, guys, and there's a few in here that are doing it. And with that, I wish you good luck, good trading.